Hi guys, once again this is Alfred from binaryoptionstutor.com. I'm generally a verbose person, but I'm going to attempt to make a very quick video response to a question that was posed to me on Facebook. Question was from a gentleman named Dustin. He was referring to a out of the money trade I done on Cantor Exchange because I'm in the Cantor Exchange Facebook group, that the one that's ran by Ryan Herron. And he says, so what makes your bias? So very quickly, um, I'm so verbose I probably should split this into three videos, but I'm gonna try and cram it into one video because I know if I do it that way, it'll make it shorter, hopefully understandable and digestible to all. So let's go with a very technical way to develop a bias, and this is something I've been doing for ages, uh, since the beginning, and it's just going with the flow, just the flow of the market, and that's by using moving averages. I got a little twist that I like to do to make it really quick for me because I noticed that guys love Ichimoku, and this is kind of like my Ichimoku twist. Okay, I got a 50 simple moving average here. This is exactly what I'm using for dollar yen, euro USD on a 5 minute chart. If I'm trading a different time frame, if I'm trading a different pair, these I look at like frequencies and they kind of change. If the markets change, they may slightly change, but not dramatically to my experience. I'm talking about like months on end, um, sometimes even almost all year. I barely change anything. So these are pretty cool for me to use to get my bias. I got a 50 simple moving average here. I take it and I make it blue. I got a 100 simple moving average here, and I take it and I make it red. And when red's on top, no matter what strategy I'm trading, I'm looking to go short. And when blue's on top, no matter what strategy I'm trading, I'm looking to go long or be a buyer in the market. I got a video that I taped where I was going long, but at the same time I was in a spot trade. That spot trade was short. I was able to make a little money going long for that little 12-minute trade on Cantor Exchange that I taped, and I made a little more money going short of the other trade when it finally came into the money. Got in here, everything moved against me. Decided to do a trade on Cantor and left the short trade here. I didn't wait till we got here to this pivot point. It's like a magnet number. I'm not waiting till we get there because by the time we get there, everybody's waiting till we get there. That's why we see that push there, and that's why we see another push there. What this means if you're trading it is it's probably going to be harder for you to get out on spot because everybody wants to get out there. So market maker is going to keep that number, keep that exit opportunity away from you. I'm trying to get out before that happens. How long? This is where I use my crosswalk for timing. This is weak up, so I didn't expect it to last very long. That's why I just done a little 12-minute trade. You see, this is a dark red, so this is a strong down, and it also agrees with my longer term bias here. And I expected that trend to last longer. That trend did last a long time. Remember, these are 5 minute candles. Okay, when is the trade over? When we close above both of these moving averages. That is the first start of when the market may be reversing. Now, you hear people and they say, well, when moving averages, they're so fucking slow. By the time they cross, everything's already happened, blah, blah, blah. Okay, technically, price action is above where it is on average for the last 100 5 minute candles, for the last 50 5 minute candles. So, very technically, that means that at the point we close here, or really even at the point that we crossed it here, I'm not really technically looking for shorts anymore. If I was in a trade and I still haven't gotten out by then, it's probably a good time for me to leave because when this closes, the first of my trade that I was in and what got me in it is unraveling at that point. This probably matters more for spot than binary options, but I'm using this in binary options to give me my bias because even if I'm looking for a little poppy 5 minute, 2 minute um, trades, like a lot of what I tape that I'll be sharing, I do on Cantor Exchange for fun. I have to have a bias first, just a way to what I believe, and I believe I'm gonna use these two moving averages here to give me a technical bias, and I can usually ride that for hours and hours on end. And again, you see this big burst here. We're trading. At that point, I'm looking to go long, so I'm looking for retracements down to a proven support area and then go long. Retracement down to a proven support area and then go long. Retracement down to, oh gee, that's the same 113 number from yesterday, and then go long. Okay, that brings me to point number two. What the hell am I doing? I'm doing what some Trump supporters probably aren't going to like the sounds of. That's a Trump dump trade. Okay, Donald Trump is making a lot of geopolitical unrest and a lot of uncertainty in the market based on erratic behavior, and so it means the market is doing a lot of zigzag. This is the Dow Jones, up, down all day. Nobody's ready to hold with too much. If you look at the futures, you're going to see the same thing. And so uh, that's a lot of range bound trading. And that's the Dow right there. And you see it didn't move very much. I'm not the only one that's trading this so-called uh, Trump dump trading. It's a lot of guys that are basically doing the same thing. Right there. There's Carl Icahn, and he's a Trump supporter, and yet and still, he was dumping because love him or leave him, Donald Trump is a bit polarizing, to say the least, and that creates uncertainty in the market. That's what's making all of this zigzag trading that's going on. And what it means is when he comes on his Twitter and something happens, and all of a sudden you've got a lot of uh, geopolitical unrest and you got a lot of uncertainty as a result, it means that you could capitalize on it, especially when you see that the technicals, or maybe the technicals are already giving you a negative bias, and then uh, thank you, Mr. Trump. He comes on and he says something that's a bit unnerving on his Twitter. Then look at how long fear is usually in the market stronger than positive news. So, when you can catch these downtrends coupled with a nice Trump tweet, can be some pretty consistent or strong moves down. And then there's going to be slight moves up. There's, Kellyanne, I think that's her name, or Sean Spicer comes out to explain what he really meant, try and clean things up. But it's all a lot of much to do about nothing because the market may not move very much either way. The third thing that I'm using, and the reason I was pointing to the Dow Jones earlier, is I'm using correlations. There's a correlation between the Dow and the dollar yen. Sometimes I'll use correlations like that, but I'm giving them in the order that I'm using them. So quickest, easiest thing. If you're gonna trade those two pairs off of that 5 minute chart, uh, just use these little moving averages here and go with the flow. Go with the flow of the market. Whether you're trading spot, If I'm trading spot, that's all I'm using, just something simple like that. Along with the correlations, I'll have to talk about that in another video because it's a little more in depth. But once you can memorize a few of them, it's not really that complicated. I don't like to make stuff sound complicated. So, the easiest thing, going with the flow. Another easy thing, Trump dump trade. Uh, Watch Twitter for guys that have got algos out here. They're using it. That's not, in my opinion, that's not necessary. That's maybe overkill, whatever. Just watch Twitter. You know, he'll give it time, and some's gonna come along and uh, see if you can capitalize off of it. Love him or leave him. It's thus far it's very polarizing, and that's gonna create uncertainty. That's all I had, guys. Hope this is helpful. I hope it answers your question, Dustin. When I'm getting out of the monies, uh, I'm looking for these pushes up, and I'm looking for that brief um, resumption of the trend. It's kind of like I'm counter trend trading against a bigger trend, if that makes any sense. See you guys on the next video. Once again, this is Alfred from binaryoptionstutor.com. If we've helped you, please help us. Like, share, comment, subscribe, and see you guys on the next video. Goodbye. Stop. I decided to add the live trade I done on Cantor that was the hedge for what we just talked about. Remember while you're watching this, the reason I'm doing the opposite in the next clip is because it's a hedge. It's just a brief hedge against the bias that I explained in the earlier clip. Alright guys, once again, this is Alfred from binaryoptionstutor.com. I'm here with a trade, another trade on the Cantor Exchange. I got about 2 minutes left. This trade is in the money here. I'm really honestly thinking about taking the option of selling it early. The trade, we're buying the strike of 113, and you can see we're in the money, really pretty good over here. Um, I've seen it higher than this. This is like buck 28 if we were to sell it right now, and you see we've got like a minute and a half left. Anything can happen, but we're like 7 pips in the money, so I may just hold it. Since we bought here, we bought at 69 cents, so there's a potential of 31 cents for each contract, and there's 8 out here on this little bet. So it's like 248. I could leave now at a buck 20. That's really half of what I need. But since I'm like deep, well, yeah, pretty deep in the money considering the time we've got left. We're under a minute. Market maker's gone now, so they're gonna really try and work me out. They got a minute to do so. Uh, we're gonna have to hold it now since the market maker's gone. But we're deep in the money, so my reasoning was to actually hold the trade. Why am I doing this trade now? Why am I buying? Why am I buying? Red's on top, so really I would have preferred to sell. Um, I'm holding an actual spot. I'm holding an actual spot position. So, and that's it for that trade. Since I'm holding an actual spot position and that position is out of the money, I decided to go ahead and, you know, make something out of the position that I'm holding that's out of the money, and just trade over here and do a little hedge. Cause that wasn't a very long trade, and it's kind of like a spread. It's simplest way to explain it is that's a hedge. Long term, I'm looking for my trade to get back in the money on spot, and we got a little pullback now. But since we were above and out of the money, I may as well make something out of it, and that's why I was buying basically around where my Forex trade was. That's hedging and something I really don't want to broach outside of. Uh, I don't do it often, and I just thought I'd do it for fun because after all, I'm trading over here on Cantor for fun. And that's all I have for today, guys. See you guys on the next video. Once again, this is Alfred for binaryoptionstutor.com.